Let's begin, though, with the market reaction to this jobs number, Jim. Unemployment down to 3.8, LFPR up a tick or two. That's nice.
Yeah, look, I didn't mind this number because in the last few weeks, the narrative had become that maybe we're not, maybe the consumers got more frugal, maybe there's not been a lot of spending. And you've seen the retail stocks all come down. This number says, look, don't worry about that. It's not going to be a precipitous decline. I think that the whole narrative of when they cut, will they cut, we got to kind of get away from that. What we have to say is, like, you know what? Economy's healthier than we thought, because next week we're going to be talking about profits. We're not going to be talking about the Fed. And this number gives me hope that profits will be okay at the consumer level, where I was beginning to worry.
We are going to talk to Lael Brainerd later on this morning about the jobs number. But quickly, some forensics on yesterday. You did not buy that this was a Kashkari-driven sell.
Oh, no. I mean, it was 138 that you saw this sudden shoot up in oil, which seemed to be very much related to stories in the Mideast. And then we had huge flight to quality. And then Kashkari spoke, so it actually was the opposite. It was interest rates were reacting to flight to quality and to it became Taiwan, it became Ukraine, but it was always, I think, the undercurrents Mideast. And the fact that oil was almost at $100 a barrel was considered to be worrisome, not from the inflationary point of view, but from the point of view that we feel something could happen this weekend, which is why I still don't trust this number. I am worried about something happening.
Does that mean you would not necessarily want to go long into the weekend today?
I just think that the people won't want to go long. I think that we're almost oversold. I think that if oil starts ticking up again, even though we have a lot of supply, that's worrisome. When you have oil ticking up and yet there's a lot of supply, and we do have a glut right now in our country, when you had interest rates going the wrong way, and then you had Kashkari, and Kashkari was not a factor, you would think that maybe interest rates would be going up on Kashkari. It didn't happen. They went down. So it's world events versus these numbers. And if we didn't have world events, I think that what people would say is, we can rotate back to the areas that we've been selling for the last 3 weeks.
Right. Interesting piece in the Journal today about energy. Gasoline inventories, for example, down 5-year low for this time of year. You got gasoline average 360 here. Nice chart out of Piper looking at when energy leads equities. Market multiples tend to suffer a bit.
Yes, they do. I mean, it's really interesting, by the way. Exxon had a miss. They pre-announced, and the stock was up anyway. Chevron has had just a huge move here. The master limited partnerships are going up big. And yet, when you look at the actual inventories, we're okay. It's the refiners that are making all the money. This is a Valero-led rally. I don't like those because those are the least value-added. I mean, if you ask me which is the most value-added, it would be AI. The least value-added is refinery. All they do is just, there's two kinds of refinery. There's the booze refinery and the oil refinery, and they're both pretty simple products. I just think that I'm just worried about Mideast.
Right.
I am, because that's what is controlling the dialogue, not Fed governors.
So your take then generally about the jobs number is, all right, there's one thing we don't necessarily have to worry about.
Exactly.
Some yesterday argued jobs number is the appetizer to the entree next Wednesday, which is CPI. Yeah?
Well, yes, and I instantly heard that. And we're always going to get banged on anything housing, rent. I mean, I wonder whether Lael Brainerd will talk directly about what happened to rent in this country, which is that you have so many immigrants come in and so many people have to be housed that the slack is completely taken up when it comes to rent. Even though autos, as Phil would tell you, unbelievable coverage as usual, that autos are coming down in price. I saw that Musk cut again. I mean, Musk is really just, he must have a lot of inventory.
Reports show that Musk is trimming the cost of at least the Y, the SUV, by $5,000.
I know.
As we know what happened to inventory in the last delivery report.
Hertz is trying still to get rid of its inventory. Hertz is a team. I don't think they're in the fight for their life, but they gotta get rid of that because that was a bad bet. So, I mean, autos, we see the switch over to hybrid. We don't have anything that's really spiking to me other than gasoline, which can be ephemeral, and rent.